Hello and welcome to the KE Report. I'm your host, Shad Markwitz, and today we're getting an update from our friend and colleague, Sean Brodrick. Sean is the editor of Wealth Megatrends and a contributing analyst over at Weiss Ratings Daily. And Sean actually puts out not just Wealth Megatrends, but Supercycle Investor, Resource Trader. And we'll put a link down below so you can follow along with all the different subscriptions and writings of Sean on the markets, on the macro and on the micro. I guess it's as we look at the commodity space, Sean, which we always like to get into that with you, the gold and silver equities have been doing quite well, despite even I would describe gold's price as sideways channeling for the last few months. The gold equities have done quite well, especially the producers, just because they've had a rocking Q2, and it looks like we're now two-thirds of the way through Q3, and we're having even a higher average gold price. You could make the same argument with the silver producers and the higher silver prices too. So when you look at the precious metals sector, gold and silver stocks, especially those pulling the metal out of the ground for a profit, how are you looking at the stocks you hold in your own portfolio and the sector, Sean?
Well, as you know, I like stocks that are producers or near-term producers anyway. So my portfolios are doing very, very well in this marketplace. In fact, I was just talking to my Wealth Megatrends subscribers. Wealth Megatrends is my monthly newsletter, and last August I sent them a report with like 7 picks in it, and that thing just knocked it out of the ballpark. We got some nice triple-digit gains in there and stuff like that. Two of the stocks were like taken over by other companies. So I'm just putting together a new report for the Wealth Megatrends subscribers, which goes out the next Friday. We're speaking on the 26th now, so not this Friday, but the Friday after. So I just think it's a great space to be in right now. I'm adding more positions to my own portfolio. Of course, in a bull market, you can never own enough. But one thing, as you just mentioned, we are seeing the miners catching up and then starting to pass gold itself. Even though gold, as you and I are talking, just hit a 2 week high, the miners are just doing extraordinarily well. And this is what you should see at this stage of the bull market anyway. You should start to see the miners really start to head higher and start to outperform the metal, which they've been doing this year. I mean, if you look at a chart of say, the GDX versus gold, I had one up earlier. I don't have it up right now. I mean, it's just very good outperformance. And that's the GDX. You can get individual outperformance that's much, much better. So I'm very happy with like what's going on. And still, there are bargains in the gold and silver industries. It's just amazing to me. I mean, considering what fund managers around the world are saying about what they expect gold to do, and considering what the central bankers around the world are saying, what they expect gold to do, the fact that this is such an underreported and undercovered industry is just amazing. I heard Josh Brown, who's a very smart guy, and he was on a podcast, not his own, but another one, speaking about the bull markets that were happening. And the main bull market he talked about was artificial intelligence. And I think the secondary bull market he talked about, which is one, and I've been playing artificial intelligence, and I've also been playing the secondary one, which is all of the electricity to feed artificial intelligence. But that's about it. Are you kidding? Look at precious metals, look at uranium, look at critical minerals, look at rare earths. There's so much bullish in the commodity sector. It's not funny. And precious metals is leading the way, though I think some of the other things I just mentioned could outperform it this year. We'll see.
Well, let's maybe get into some of those other sectors. I mean, there's no doubt the precious metals have been strong all year. It was particularly noteworthy in Q1 where the general equities were rolling over, but now in Q2 and into Q3 where the US stock markets have blasted a lot higher, I think a lot of generalists have lost the trail of how well the precious metals have done. But there's even people coming into the resource sector through different doorways now. They're coming in through the nuclear doorway with uranium. They're coming in through critical minerals because of copper and some of the other specialty metals that you need for the AI data centers, as you outlined. They're coming in through the doorway of rare earths because of the Chinese export ban. So I don't know which one you want to dig into first, but let's maybe do rare earths just because it's a niche sector. But there has been a lot of generalist interest in the sector, especially after the MP Materials deal with the Department of Defense coming in as a main stakeholder. U.S. government taking a stake in a minerals company. What kind of a wacky world are we living in, Sean?
Well, yeah, and My subscribers owned MP Materials before the government bought it. So that's kind of nice. And it's a very small group of like Western rare earth producers. And we really like MP Materials. I mean, we have triple digit percentage open gains on it. But one thing that I'm looking at now are the heavy rare earths. Now, there is a uranium stock you and I both like, which is called Energy Fuels. It's always seen as a uranium stock, but it's also a heavy rare earth producer as well. And it just signed a deal with a company called Vulcan to get that whole pipeline from like mine to product on the heavy rare earths actually moving along. So I think that's really good. We are seeing China squeeze and squeeze the West more and more on rare earths. They just rolled out more restrictions this past Sunday, though we're not seeing it talked about in the press, which is driving me bananas. I can't believe this isn't a bigger story. I mean, yeah, you do see some small stories here and there, but honestly, this should be on the financial news all the time, not what they think NVIDIA's earnings will be. We'll find out what NVIDIA's earnings are Wednesday after the close. All that speculation is pointless. But what's happening now is the restrictions from China on rare earths. And that's causing a little bit of a panic, but that's making the US government and other Western governments more determined to get their own rare earths pipelines built. And we are way behind the eight ball. The US exports more than 95% of its domestically mined rare earths. Admittedly, we don't mine a lot. More than 95% of that exports it to Asia for processing and refining. So we need to build that entire infrastructure. And there are some companies that are doing it. They are companies that I've invested in, and I have my subscribers invested in them. I think it's really, really a place that's just underappreciated by the market, which is the real opportunity. I mean, honest to God, Wall Street is asleep at the switch on this one. So if you want to get into rare earths, there's not a bad time right now. Maybe later on it'll be overbought and stuff. And yeah, we've seen big run-ups in these individual stocks. You know what? I think they can go a lot higher. They can go a lot higher because there are certain people in the Trump administration who are truly terrible at like negotiating trade, and yet somehow they are in charge of it. And so they do things like insult the Chinese, stuff like that. China has an easy way to hit back at us, and that involves rare earths. And I think that's going to happen more than more. So I think that this is a space that I'm happy to be involved in. I'm happy to have my own subscribers in it. And I think it's going to have a fantastic rest of the year and probably next year and the year after that as well. It takes time to build out these supply chains. I mean, we really have so much we have to do in the US. And so the US government is solving that by throwing money at problems and lifting regulations, making it easier to bring these mines and these processors online. So that's something that's extremely helpful. And so I am happy to be involved in this.
Well, and Sean, one observation I would make as someone that's followed this sector really since the last boom, which was 2010 through 2012, so I've been watching it for about 15 years here. I noticed that to the very point you made, that it's the processors and the separators of these rare earths that seems to be getting the bigger bid, more so than, let's say, the mining stocks themselves. Now, MP Materials is unique in that it's also mining at Mountain Pass in California. But when you look at some of the processors, you mentioned Energy Fuels, where it's processing mineral sands to produce those heavy rare earths. It's gotten a big bid, and it's not just the uranium bid, it's the rare earth bid. But other companies like Neo Performance Materials, Ucore Rare Metals, Aclara Resources, these are all companies that have downstream processing abilities to separate. Each of them has their own proprietary technology. There's another company called Cotec Holdings that's recycling rare earths. So when you look at that end of the spectrum, it's a little different than just a run-of-the-mill mining company. Do you think that even though they've had the big runs, since that's where the pressure point is the ability to actually get the end product out, you mentioned you still see upside. So when investors look at these, they'll see hockey stick up charts, but you think it can still keep going, huh?
Yeah, I mean, now it won't be a straight line. Maybe you want to wait and buy the pullback. It all depends on your own individual stomach for like volatility and stuff like that. But yeah, I think these things have much more upside. They really do. We are going to see them get more contracts because, along with the Department of Defense contract for MP Materials, which was a game changer, they also got a contract with Apple as well. And so we're going to see more of that stuff coming in. We are going to see the car companies come in and like start to source their stuff at home. It's just going to be easier. Probably the US government's going to make it easier for them to source it at home. We have seen with the current administration, they have a very proactive way of like ordering the economy around, and saying this is what we want to happen. And so I expect to see more of that stuff in the same vein.
Well, another sector that's been getting a lot of airtime, and I guess it kind of ties in, we've already mentioned uranium, so let's just bridge the gap right into nuclear power and uranium, is the nuclear sector. The four executive orders from the Trump administration, all of the tech companies partnering with utilities companies to try to source their power or small modular reactor stocks. Boy, we saw a huge run in those, the SMR stocks. And then obviously that filters down into the raw source feed, which is uranium. And in many of the same ways that oil and gas were the fuel for mobility and for energy, you're seeing the same things finally start to happen in the uranium sector after a pretty rough slog for a couple months. How are you looking at it now, the nuclear stocks, the utilities, and the uranium stocks?
Well, I actually like all of them. I mean, we're doing quite well with the specific utilities that I have on, but I'm choosing the utilities I add because they're more exposed to building, or I should say, feeding into the power demands for these AI hyperscalers. So I'm choosing very specific utilities, but they're doing quite well. So I don't have any complaints about that. But yeah, I mean, the major problem I have in the uranium space is Western uranium is such a small industry. I mean, it's tiny. There isn't much besides Cameco, which is the 800-pound gorilla. These companies are so small, but that's good from an individual investor point of view because, for one thing, most of them are still pretty cheap, so you can just pick them up on the cheap. But also, they can change their revenue and their earnings rather dramatically, and just boost those things from like quarter to quarter. And also, they can be gobbled up either in a consolidation or else by some larger player just scooping them up. So I like that space. I think there's some opportunities there. You can have some missteps. You have to be very careful in this. And honestly, this won't be for the faint-hearted because as bullish as things look in uranium now, something will happen that sends these stocks down. But considering how this is one of the greener solutions to our energy problems, it's much greener than coal, per se. And you can make the argument that it's greener than natural gas as well. I mean, it just is a logical solution to the energy problems we have, which is that we are going to need so much more energy for our plugged in future, where everything runs on electronics and where the AI hyperscalers and others have tremendous power demands. So nuclear power just makes sense, and that's a place where I want to be investing.
Well, just kind of a nuanced follow-up on this. When you look at some of the U.S. producers, to your point, they're very tiny compared to Cameco, which is a juggernaut of a producer. Really, most of the production in the world comes out of Kazatomprom in Kyrgyzstan and Cameco in Canada. But Canada has no other real producers. I mean, you could argue that the French company Orano is a producer and has some limited production exposure to Canada. But really, Canada is a one-trick pony at this time until some of the other development projects come online. And the earliest one is Denison's, and that's not slated until the end of 2028. So it's 2025. We got 3 years before that even comes onto production. So the U.S. producers, they're tiny, but to your point, they could have these big percentage increases. Do you anticipate that the handful of U.S. producers may get consolidated into a larger company?
Yes. And I'm glad you mentioned Denison because that was one of the ones that I was going to mention because it must be frustrating for them. Their project isn't going to come online until the end of 2028. They do have some cash, though. I mean, or else they could work out a deal and just pick up one of the other ones and also get some U.S. exposure. I mean, I like the Canadian companies, especially because they can feed into Europe and they can also feed into Japan and stuff like that. But we do have these trade barriers now, and will they be on uranium? Will they not be on uranium? That outlook seems to shift from week to week. I don't really know. And so having a U.S. producer just insulates you from any kind of trade barrier problems that also could occur in the future. And one thing we should mention is that because of the trade barrier uncertainty and the tariff uncertainty, not only on Canada, but on Russia and like stuff like that, the utilities have been underbuying because they're just kind of wait to see what the hell's going on. They like some certainty. So there's a gap in the market that needs to be filled. And it's certainly going to be filled this year. And that could send prices, which have come up off their lows, but they're still kind of snoozy. That could wake up prices in a serious way.
Well, another question I have on uranium, just maybe one more follow-up, is we talked to some of the earlier stage companies, which I know are not as much in your wheelhouse, but guess what? They're not on anybody else's wheelhouse either. They have
Yeah.
they have really lagged. The uranium explorers have kind of been dead in the water, and the vast majority of those are in Canada in the Athabasca Basin. There's some in the Thelon Basin, and there are some U.S. explorers. But let's just say the biggest chunk of the sector, as far as not just the explorers, but the developers, is in Canada in the Athabasca Basin, and they've not been getting any love. Do you find it weird when a sector is doing so well on the producer side of things, but that the early stage of that mining sector, the early stage companies are totally being ignored?
Well, there's a reason that I don't play in that sandbox very much, which is that I always seem to buy the stock just before they do a new share issuance, you know? And so then what I've invested gets diluted and I end up hating the company and myself. So that's the risk they have. I think the best time to buy those is right after they raise some money. So whatever they've done to dilute their shares or else take on debt or else do a stream, that's already priced in. That's probably the best price you're going to get, right? After they do that. So I would be patient in those and pick them up on a pullback. As you're saying, they aren't getting much love now, but the gold market teaches us that every kind of gold company has its day. First, you have the large producers out producing. Then things move down to the mid caps and they start to outperform everybody. Then the smaller producers, the one mine companies really start to take off. And then we get down to the explorers and the developers. And when those things blast off, it's usually later in the cycle, you know, or at least it's been my experience. Maybe you have some different insight into this, but it's later in the cycle that like that kind of thing happens. But it happens. It absolutely does. So if you're patient, then that patience can be rewarded. But I would buy on a pullback after they do something to raise the cash that they need because they aren't producing right
Yeah, it's a great point. Those are usually dilutive events, but then there usually is a catalyst with that money afterwards. So
now.
we'll
Yeah,
we'll
yeah.
definitely keep tabs on when some of those companies do raise and the ability to jump into them and maybe play for the catalyst. But can't go wrong with the producers in any of these commodities in general because they're the ones that can monetize the higher commodities prices. Now, I know that outside of the realm of commodities, you also look at other sectors and you talk about these in your Super Cycle Investor and in your Wealth Megatrends. We end up talking about defense stocks with you, and rightly so, because it's been a sector that's been garnering some interest, and you've been able to pick a lot of winners for your subscribers. So maybe give us a high level thought on what areas of the defense sector you're most animated by right now.
Well, I mean, I like what I call the next gen defense. The next war will be, or at least it seems like it'll be, mainly about drones and hypersonic missiles. Drones because, it's a easy way to get out there and take action without putting your own forces at risk. And the drones are just becoming smarter, terrifyingly smarter. And then hypersonic missiles because you can hit the enemy before they even know it's coming. And the opportunity there is the US is way behind the eight ball. Other countries already have hypersonic missiles. We're only testing them. So the way for us to fix that is to throw a lot of money at this. And so we have some companies that are doing quite well with that. But there's a new catalyst. I mean, yeah, our drone companies are doing well. Hypersonic missile companies are doing well. Anti-drone companies are doing well. That's good. But the new catalyst is the White House just said that the Trump administration are thinking about whether the U.S. should acquire equity stakes in defense contractors the way it did in Intel. In fact, Howard Lutnick, I have real problems with that man because he says the worst things at the worst time. But one thing he said was that inside the White House, there's a, quote, monstrous discussion about defense, unquote, going on. So They want to take stakes in defense contractors. I don't think the government should be doing that, but if they're going to be doing it, then I definitely want to profit off. And which has been my view on like all this stuff. I can't change the way the world works, but I might as well make money on it. And what they are talking about is saying, okay, we will choose these companies, and we will make sure they are going to win because we'll be giving them more government contracts than they have now and stuff like that. And that could help, say, companies like Lockheed Martin and like RTX, but who's really going to help is the tiny little next generation defense companies that I invest in, some of them. Here's the thing. One of the drone companies, or I should say drone software, and it also does hardware companies that we've invested in, has one of the Trump spawn on its board. You can bet if there's going to be any kind of investment by the government in these small defense companies, they're probably going to favor ones which already have a favorable relationship with the Trump family. That's just how this family works. And again, you can complain about it all you want, and I understand that, but this is just an easy setup. It's an easy way to make money. And so I plan on increasing that position, and we'll see how that goes. I don't think I'm wrong, and there's some real opportunity in the next gen defense companies.
Well, Sean, you bring up a really interesting topic here about the government's involvement investing in public equities. And it's the same kind of conversation that comes up around subsidizing food crops and like what you see in agriculture or what you saw with the solar industry under the Obama administration or what you've seen in other industries that get subsidized by the government, the auto industry back when they were doing the bailouts and everything. And as a more libertarian minded person, it bothers me to see the government getting involved, but from a very practical reason and pragmatic reason, as you mentioned, as an investor, I want to profit from it if they're going to do it. So
Exactly.
we talked about MP Materials and getting the Department of Defense in. I talked with a tungsten company last month that got some DoD money as well, because they're getting directly involved there. We've seen the government getting involved with antimony, or at least fast tracking permitting of with the Stibnite project in Canada. We've seen Canada also getting involved with some of their resource stocks. We've seen it happen with lithium. And so if we're seeing it in Intel and the Trump administration saying they want to be directly involved in some of these defense companies, it gets a bit incestuous in that some of these companies have board members that were ex-government employees or ex-cabinet members of other administrations, and you start playing favorites, and it kind of interrupts the free market system. But then as an investor, you want to make money. And so you see this money coming in. I guess, how do you square that circle where you don't want to see government interaction and involvement in companies because you're basically favoring one over another, but you also love to see government money coming in? So how do you deal with that?
Well, I mean, you have to make your own choices. Like I said, no one asks me about any of this stuff. It's going to happen anyway. And it used to be a real crisis when this kind of thing happened, but apparently it's all okay now, right? I mean, the people who used to object and like raise hell about this stuff do not care that Trump is doing it, do not care that his family is involved. So if it's going to happen, as you said, we might as well profit from it. So I try not to think about it too much, except to think about the money that I'm going to be making. And that's, I believe, the way to approach this. We can't change the world. Hell, I mean, I'm lucky if I get to decide what TV shows we watch at home. I can't change the world. so, I mean, just make your best bets for what you think is going to improve your own financial well-being. If there's one watchword that's coming out of this administration, is look out for yourself. And luckily, we have some opportunities to do that.
Well, I appreciate you highlighting some of the areas that have your interest in the defense area. And it is interesting to follow the money and follow the contracts. And if that's the way it's going to be played, as an investor, you kind of need to put politics to the side and just say, what's the best thing economically for these companies? And if they're getting either involvement from the government or the ability to fast track permitting or the ability to develop new processing, that ties into some of these executive orders. It also ties into some of the bills, not just from the Trump administration, but the Biden administration, trying to help the development of critical minerals projects, of energy, of independence from China. So some of it, you understand why the governments get involved. And it's not just the U.S. Again, Canada's doing it. Europe is doing it. So it seems to be a global phenomenon. And if you want to track the trends, the mega trends that are happening, I recommend clicking on the link below in the show notes and following Sean as he writes about these for his subscribers in the various publications that he offers. So whether it's Super Cycle Investor, Wealth Megatrends, or Resource Trader, or just his comments over at Weiss Ratings, definitely check Sean out in the link below. And Sean, we definitely appreciate you investing some of your time with us here at the KE Report, and always looking forward to our next conversation.
Thanks. I always have fun talking to you. Have a great one.